So I see the labor market as stable around full employment. We have an unemployment rate at 4.2%, which is consistent with full employment and, low by historical averages. We have a ratio of vacancies to persons unemployed, which is above 1, meaning there is more than one vacancy, slightly more than one vacancy for each person unemployed and looking for a job. We have the transition rates from employed to employed are consistent with a full employment labor market, and the employment cost index is consistent with a full employment labor market. Now, there are some signs of weakening. Payroll growth has been low. There were very large revisions, as you know, to the last 2 months of reported data. The story there is the demand for labor has declined, but so has the supply. And that's why looking at levels may be less informative, that is, levels of payrolls, than looking at ratios. And that's why I'm looking both at levels and at ratios. You may recall that last year we had a break-even pace of employment that was north of 150. This year, with lower immigration flows, it's reasonable to expect that break-even rate to be sub 50. And in fact, in spite of historic revisions, these were 3 standard deviation revisions, which you should expect once every 2 to 3 decades. In spite of those revisions to the level of employment, the unemployment rate stayed unrevised, which tells me that the supply of labor also declined, or cooled, let's say that.